Good evening and welcome to the Business Day. I'm Vashan Brown. Some 50 jobs are on the line as Scotiabank Jamaica embarks on its latest restructuring exercise, which will impact 4 branches. Our business reporter Javon Keys got an update on the ongoing discussions with the bank from the president of the Bustamante Industrial Trade Union, BITU, Cavan Gale.
More changes are coming to the Scotiabank branch network, with the closure of another branch pending and the conversion of 3 to a digital branch format. Workers have been restive after news broke of the pending restructuring, for which we understand a timeline has not yet been finalized. Last Friday, the Bustamante Industrial Trade Union BITU met with executives of the bank to discuss the latest round of changes. BITU President Cavan Gale says 50 employees represented by the group will be impacted.
What we have agreed on so far is that we are going to continue the consultation. We would have identified the areas in the respective branches, the one that is going to be closed, which is Crossroads, and the others, which is Linstead, Montego Bay, and Hagley Park Road, that they are going to transform into a digital platform.
He says more consultations will be held with the workers ahead of the start of negotiations with the bank's leadership on November 15. Mr. Gale is hoping more options will be placed on the table to reduce displacement.
One of the other things is that we are going to demand is that this transformation must create some new jobs. We see the need for businesses of this nature to create new roles within the organization, to which these impacted employees or any other employee within the system can transition. But the bank is willing also, in order to mitigate against job losses, to incorporate a voluntary separation exercise, where those who may wish to elect to separate themselves with a package can elect to leave.
The bank's restructuring decision is in line with its digital transformation direction. Earlier this year, Scotiabank closed its branches in Old Harbour and Black River, while 6 branches were shifted into digital operations. For the Business Day, I'm Javon Keys.
From banking to telecoms, ratings agency Fitch says Digicel's improved creditworthiness coming from its $1.85 billion deal to sell its operations in the Pacific will be limited as a result of aggressive attempts to restructure its debt twice in recent years. However, the Irish Times says Fitch and rival Moody's have confirmed that they have put their Digicel credit ratings on review for upgrades as a result of the planned sale of the Pacific division to Australia's Telstra. The deal was announced last week. Moody's said its review may lead to a multi-notch upgrade from its current CAA2 Digicel rating, which is 7 levels below what is classified as investment grade. Fitch has also signaled it may upgrade its Digicel rating from a similarly low junk bond level, but Fitch warned that Digicel's debt restructuring deals in the past 2 years remain a constant on the upside for the ratings. $155.91 is the average selling rate for the U.S. currency. It's costing $125.27 for the Canadian dollar. $212.35 is the going rate for the pound and $184 for the euro. The JC Index lost 355 points today, while the Junior Market Index lost 4 points. Among today's winners were Victoria Mutual Investments, MPC Caribbean Clean Energy, Mayberry Investments, First Rock Capital Holdings, and G West Corporation. While on the losing side were Productive Business Solutions 9.75% shares, Sagicor Select Funds Manufacturing and Distribution, Main Event Entertainment Group, SSL Venture Capital Jamaica, and Trans Jamaican Highway US dollar shares. And that's the Business Day. I am Vashan Brown. Have a good evening.